Hello traders, welcome to another video about gold. Today is Sunday, June 4th. It's around 9:15 p.m. Eastern Time. We start with the fundamental analysis. The US Treasury Secretary Janet Yellen on Friday set a deadline for raising the federal debt limit, which is old news by now, as Biden has already signed the law, and as I said in my last video, it shouldn't be a moving event in my opinion. Coming on June 13th, the CPI. If there is no upside surprises in inflation, that will support gold and support no hike in Fed's decision. The expectation is 0.4 month over month. This is the core, and an increase of 0.1% year over year. June 14th, now the probability now has shifted towards a no hike. In my last report we were at 40-60, now we are at 75% no hike and 25% the Fed will increase the interest rate by 0.25%. With this new odds for a no hike, I believe it could push gold to test the 2000 handle within the coming 2 weeks and maybe test a high at 2080. Of course, pay attention to the Fed's meeting minutes, the Fed's plots, and the chair's speech should be much more important than the headline. From a technical analysis perspective, gold retreated from 1982, strong resistance as anticipated in my last report or video, and now testing a very strong support at 1940, which I'm going to show you in the coming chart. And this is the daily 100 moving average and the 20 weekly moving average. I strongly believe this support will hold, maybe goes a bit lower to run some stop losses and rebounds. And a high probability entry is a buy at 1942 for another test to 1980, 2000 and maybe higher by mid-June. But an ideal stop loss should be below 1919. This is 23 points stop loss. And the target price should be a test of 2080, which is 140 points profit. Now, this is a theoretical trade. Nothing is guaranteed, but it has a very favorable risk-reward ratio if it goes well. These are the same Fibonacci retracement from the last video, the resistance at 1971 and the supports at 1903, 1849 and 1794. This is the weekly chart from tradingview.com, and as you can see now we are at the 20 weeks moving average support at 1939, and as I said, this should be a strong support and prices could rebound from here. From a daily perspective, we have the Bollinger Bands, the upper band at 2035 and the lower band at 1919, and prices should be bound between these two limits for the coming days. The MACD could be turning up, but it changed its mind, and I don't know. We will see. This is a chart just to show you the inverse relationship between gold and USD futures. And I'm showing this chart because you could predict the price of gold based on the movement of the USD. Now with no hike, this will not support the USD. So I expect to see gold at higher prices within the coming maybe couple of weeks or 3 weeks. We will see. Anyhow, be careful and do your own due diligence, and good luck.